traders from around the world. Very excited about this edition of our interview with a trader who trades, loves the markets, and helps other people learn as well. And so every single Wednesday, we reach out to a trader from somewhere in the world about trading and just ask them about their experience, about the markets, about their livelihood, just all kinds of cool, fun things. So Samantha, can you hear me okay?
I can. Happy afternoon, Jeremy.
Yes.
How are you?
I'm doing good. I'm really sorry I was like 6 minutes late. You know, today's been one of those days.
Oh
So.
my God. Yeah, I'm glad there's no webinar. I've had no chance to put makeup on. So,
Oh man, I barely ate today. Like I was hunched over my computer just shoveling sausages and sauerkraut. Like that was it.
I had a chocolate bar. Okay. No, really, this is very eventful, but it is, it's time. It's time.
Yeah, it agreed. Totally agree. I'm glad it's happening. It needed to happen. So Samantha, just tell everyone a little bit about yourself, who you are, what you do, how long you've been trading, and how did you get involved in the markets?
All right. Well, I'm Samantha LaDuc. I founded LaDucTrading.com. I'm also the CIO of LaDuc Capital, LLC. So I actively trade for a living, and I support clients who do the same. I am not as good at educating and hand-holding and cheerleading as you. I really am more for the professional retail trader and the small institutional trader who is looking for my macro calls and my ability to operationalize those into actionable trade ideas. I do chase, I do swing trade, and I do trend trade. So I use all three different time frames. But I use macro as my backdrop. So I am very intent on watching and anticipating what the Fed moves will be, a volatility. I'm a volatility trader. I am very interested in global equities, fundamentals of earnings, not just technical. By the way, I started as a day trader of stocks.
Okay.
I'm now a professional options trader that is using this backdrop of macro, but I'm still a pattern recognition girl. So I am always going to enter and exit a trade on technicals, even though I do look at the macro intently, the fundamentals and all that other jazz. I'm an intermarket analysis is my kind of thing to time volatility. So I have been waiting for this because it was a time frame congruence thing, meaning we had the January 2018 top, and then we had the October 2018 top, and that was a rate of change on the 10-year. But long story short, 9 months from that October would be August. And so I wrote about and tweeted about even, so not just for clients, that I expected 1 week after FOMC, and I wrote an article in MarketWatch, that the Fed would cut and that it would disappoint the market. So that was my thesis, and it was based on, macro and intermarket and technical, and here we are.
Here we are, finally actually happening, a little bit of a pullback, which again, as you mentioned, is healthy, I think.
I don't think this one's as healthy because it's got, you and I are different, right? So we are going to be trading whatever we see in front of us.
That's right. That's right.
And my time frame is not years. I'm not an investment advisor. I don't play one on TV. I'm at most, 3 to 6 months. So I am very much looking 3 to 6 weeks. I'm really into right in front of me. But the point is, I think we have a very big inflection point. I've been waiting for this. So you timed this. I'm not normally this animated. I am extremely someone who waits and waits and waits and waits. I think we have an inflection point now that between now and September, the only thing that's really going to pause this bleeding is Powell coming out and saying that they're going to cut 50 basis points at the September meeting. And if he doesn't come out and do it around the Jackson Hole timeframe, the market's going to make him.
Interesting. cut it again. You think that's going to happen, huh?
Oh yeah, God, yes.
Yeah.
And so the macro is going to drive this. And right now, yesterday, it was very interesting. So this is what I do. I'm looking for headline risk. I was positioned short, and we had that ginormous algo-driven bounce at the open at exactly the same time that Trump came out and said, you know what, we're going to kick this can, or at least part of the can, in tariffs down the road to December 1st. Do you know why he came out exactly the open to do that?
What was that?
3.5 basis points until we had the 2 and 10-year yield curve inversion. And the only reason that was out. So we did not hold any of that. We've taken out the lows. Why? We inverted this morning. So yield curve still trumps trade wars. Yeah. Trade wars, however, are going to make the weather with earnings season, of course, contraction, sales, all that. And the fact of the matter is GDP. So if we don't have the expansionary effects of trade, but the opposite, and all this, market manipulation by the White House, we're going to have contraction. But, there are some structural other reasons to be bearish. And those are the reasons that are actually even more powerful than trade war. And right now, the bond market is clearly saying we're up a creek. And the only way the market's going to let this bloodletting release itself is if Powell comes out. Not this morning, Navarro, useless. The market's afraid of him anyway because he's a big bully for the trade war. And he wants to devalue our currency into prosperity. No way is Ross, oh my God, Wilbur Ross, big, huge, clown, is going to give us any confidence whatsoever. So that left Bullard. Okay, Bullard just said the economy's fine, Fed's not going to help you. Market says, bite me. So it's not a good time for market participants to buy this dip, in my humble opinion.
I like that. I really, 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 really do. And I got some of your social media up on the recording, and you probably should be able to see it. But I just sent you a LinkedIn and Twitter.
Oh yeah, see, I'm not even on. So
this is your website right here.
Yeah, my website is there. My Twitter feed is probably most impactful, which is I have two. I have Samantha LaDuc, where you can scroll down. I just put on my big warning. I don't think this is done. And I have not written like this before. So the folks who follow me on Twitter are really, let's just say, I don't want to mess with them. I don't want to lose them. They're important. I also have another Twitter feed, which is more of my technical stuff, less macro. So if you were to type in @LaDucTrading.com, then you would see this is more, I just started this one. Okay. So here's where I will put charts.
Gotcha.
Okay, I'll put my, I haven't for the past week, but I do a daily, which is my macro and my micro, like playing the oversold bounce, that kind of stuff. So this is more technical and chart driven. I think your clients will definitely be more interested. Although I don't tweet as much. The other one's more macro. I tweet more.
Sure, totally understand. And so my biggest question, I think, for you, and the reason I want to reach out to you is because you are an incredible macro mind, and I'm not. That's not one of my specialties, and I'm always striving to get better at that.
Oh, you're so sweet. I'm not a macro wonk at all, by the way. I really am not. I started trading and decided, okay, well, you wanted to know how I kind of got into this, right?
Yeah.
Okay. Way back when, no, just kidding. I had a medical emergency of my son, my third, my youngest, and I sold my business. And a year and a half later, he went back to school, and I was not interested in starting anything. It looked just not very conducive, honestly. And I definitely didn't want to be, working for somebody, traveling all over the place. I wanted to be at that bus when he got off, with my daughters. So I created, if you would, this openness to explore, what do I want to do if it's not, have a business. And I was taking, definitely time off for my son, and that's pure joy, being a mother. But I wanted to use my brain, right? So this meant, guess what? I knew some fundamental stuff. Maybe I could parlay that into, and I had some money from selling my business. So that's really two things right there. I had some money and I had some curiosity and some skills.
What business was it?
Oh, language translation. So it was adding languages to technology, engineering, websites, documentation. I did that for 10 years. I sold it to 2 employees who bought me out, sadly from the hospital. But the point was, it was time for me to reinvent. So after a year and a half off, I definitely decided I wanted to get into this investing area, trading area. So I sought out the best mentors, the best platform, the best information, because that's kind of how I work. And it fed my brain. And then, of course, guess what? It was September 18th, 2008.
Wow.
So it was layman. And that was another thing. I kind of wanted to safeguard what I did have. I ended up growing that pretty substantially in 6 months. And at the time, I didn't realize, because I was new to trading, September 18th, 2008, I became an active trader. Okay.
Yeah.
Now, shorting was like fish in a barrel for the next 6 months, but I didn't know how to trade options. So I did have a talent for patterns. And then, basically when it was all said and done and calmed down, in about a year later, literally 1 year's gone by, right? I'm like, now I really want to learn how to trade. So I just went in and would literally contact folks that I found, whether it be Twitter or what have you. And we'd start to exchange some information, because I'm kind of the curious type. And they would maybe respect a view that I had or a chart read that I had. And then there'd be more dialogue. And these were mentors that turned into colleagues. And then I would ask if I could shadow them. This is before Zoom.
Sure, totally.
So I would ask if I could shadow, and I would literally go wherever they were. And some of them were traders, and some of them were hedge fund managers, and some of them were, value managers. They just had something that I thought was a skill I wanted to learn. And I would go shadow them for a few days. And they let me. And I basically learned that way, plus enormous volumes of just studying others, like you are a mentor to your students and to those who want that sense of community. Well, for me, it was just education. I wanted just to be a sponge and take the best of whoever I came in contact with. And that's how I kind of grew it. And then I decided later on that I really wanted to understand why stuff was moving. Like you just heard my little, I don't know what you call it, soapbox on why stuff moved yesterday and why stuff is moving today.
Yeah.
So that interested me. It was no longer what the chart, what the price action was doing, which by the way is always what matters. But it was why. And so I wanted to be able to, in my own brain, know why something was trading, how it was trading, and then of course, how best, how to trade it. That was really kind of the evolution. So I'm still learning. I'm still learning.
Absolutely. We always are still learning. I mean, that's for sure. But what about like your general knowledge or consensus on things like bonds, yield rates, the Federal Reserve interest rates? Were there books, were there classes? Did you go to taking classes, or just kind of general political knowledge?
No, it definitely not politics. I have a very, strong opinion of my own, but I'm not going to share it, and I'm certainly not going to let that influence. I think that's totally, totally dangerous. So I look at it basically as, how do I put this? So you can get a sense, I know you have done this long enough, where you can tell when someone's in the zone, can't you?
Yeah, for sure.
No, for sure.
Yeah.
I knew that I didn't know what I didn't know, but I could identify who did really know it, who wasn't talking smack, who wasn't, just for ego, in promotion mode. It was, they genuinely had a grasp, and it didn't have to be a particular perspective, because it was funny. There's a guy who follows me, several, but I mean, he said, "I love your likes on Twitter." And I went, "What?" He goes, "You do not like the same argument. You go for both bear and bull. It's like you are constantly weighing the two." And I said, "That's exactly how I think. That's right. And the stronger argument will win." That's basically, I want somebody to convince me of the bear or the bull, and I'm always taking the other side. What is the bull case? What is the bear case? So I lawyer my own thoughts and my own trades. And he said, "I can tell from what you like on Twitter that you're doing that." It was really funny. But I can also, by doing that, find traders or macro managers, gurus, whatever you want to call them, who are in the zone and those who are out of the zone. So and then I will basically have a conversation with them. And then they share more, right? Because they not only have now a fan, but they also have somebody who can be respectful in their arguing. In other words,
right.
Like I did this morning with Luke Gorman, and he's brilliant macro wonk. And I'm like, "No, I don't like what you're saying, but it's because I'm fearful." But you're assuming this is going to be a controlled devaluation, and et cetera, et cetera. So we have a very respectful exchange, and that's how I think knowledge is gained, not from dismissing anyone, politically or intellectually, but we're guaranteed to be wrong. But there are some people that are just more thoughtful.
Sure.
And I look for that, and also willing to take the other side and change their views. Like Mark Chandler is a Forex guru. He's written the book, and he will probably one day work in Treasury. And, he changed his view on gold. And I'm impressed by people who have that standing, and yet that open-mindedness, because they want to actually, add value and be in this game for the long run.
Right.
And you can't if you're just going to hold one position in your dying hand. It doesn't make any sense to me.
Yeah, I agree. You have to have some form of not even some form of flexibility. You have to just be flexible and know when to change. Kind of like Peter Schiff. I'm just not the biggest fan of his standpoints on a lot of things. The way he approaches it, because it's just very like rigid, and this is how it's always going to be, and there's no way around this. This is how it always is. I'm just like, I don't think that's correct.
Yeah, and there are some others. Hussman is another one, but they're also they're right, but they're wrong in their doggedness. Like nothing else can change their. In other words, I think it's very hard. I will analyze and think, and I might not necessarily trade the way that I'm thinking, and that always bites me. At least if I can be in sync with what I think and how I trade, if they're in sync, then I have a far better outcome than when they diverge.
Sure.
So, but I try to stay flexible. And yesterday I was annoyed because
oh, I bet you had to be. Had to be.
Because it wasn't that I was caught off sides. I mean, who knew Trump was going to come out on August 1st and say, we're going to have tariffs of 10% on September 1st, and then the market drops, right, for 5 days.
Right.
And then he comes out and, yesterday morning at the exact same moment we're about to have inversion comes out. I knew that one was manipulated, though. I knew that wasn't going to work. So, but that's just because it's basically the weight of the evidence. What matters more? The rates that make the entire world go round, or Trump getting caught in a lie and manipulating, markets for a short-term, gain. Yeah, big picture, it's parent-child relationship. Parent's going to have more influence. So I was annoyed because I got stopped out of some of my shorts.
Yeah.
That's my own dang fault for not having good stops. But
well, fill me in on how you played it. Did you short the minis? Did you go long puts on SPY? How do you take short positions, if you're allowed to tell us?
oh gosh, I've got a bunch, and I keep them all. Let's see, what are we doing? Hold on. So what I do first and foremost is I look for rotation. You can't see my what's it called? My chart.
Yeah.
But I can tell you how this works. Okay. So first of all, I'm looking for the roll in the form of a pattern, first and foremost, and then trying to size up if it is a chase, a swing, or a trend. And those are different time frames. So for example, if I think something's going to move in the next 1 to 3 days, I will use options that are 1 to 3 weeks out, and that's called a chase. If I see something that's going to be more like 1 to 3 weeks, I consider that a swing, and I'll use options also that are monthlies, right? And then if something's in a trend reversal, something that's going to take probably more like 1 to 3 months, I'm going to use usually spreads, and it's going to be further out in time, right? Like 3 to 6 months out as far as options. Does that make sense?
Mm-hmm.
Okay.
So you're mostly an options trader.
Oh yeah, no, absolutely. So I use only stock when there's not a good options market, or it is such a fast-moving speculative, thing, or it's a low price. Like I happen to like Cloudera right now, CLDR. So I don't mind owning stock and options on that as a bottom fishing play kind of thing. But if it was, like this crazy, I know you also day trade stocks.
I do.
Yeah. So if you see something that doesn't have a liquid option market, it doesn't have a lot of options,
Sure.
then it's not safe, and your clients get hurt. So I actually run a trade alert service as well, but mine is based on my brokerage fills. So I have basically I tied in via API, and I built this little fintech platform where I place a trade, and then it directly tells my members via SMS, web, and email exactly when it fills. So there's no manual typing of anything. It's exactly when it enters and exactly when it fills. And because I have also institutional clients, and not big ones, but usually small ones, RIAs, bank money managers, smaller hedge funds. Okay.
Right.
So they're not trading anything small, and they're not trading, any illiquid option market. So I have to use stock in that case. So that's basically what determines if it's stock or options. I need to make sure that clients can follow, and I'm not front running or making a market, because I don't trade big, but they do. They do. And so I have to be very, very careful about that. So that's why I trade options. It's also because I'm not trading big, meaning 1.5, maximum 3% of available equity, and usually not unless I am really, really convicted. So I don't trade big. I trade often. I trade baskets. So for example, I have, chip shorts. I think I have an Apple Chase short. I have a NVIDIA Chase short. I have BABA and EEM swing shorts. I have, there's a little buy program that just ran at 127, by the way, for a full minute. So it's a nice little bounce. I'm just looking at what the heck I even have.
Sure.
So when I trade, it is typically I'm looking for a sector rotation. What's the weakest? We had oil inventories, and obviously that wasn't so hot. But mostly it is, I'm looking for a sector that moves together. So I've got, tech shorts, lack of a better word. When the, unicorns all trade together, that's IGV. If the semis trade together, that's SMH. So I'm doing ETFs, but I'm also doing the individual plays underneath as well.
Gotcha. Okay.
And I'm not trading off a 5-minute pretty much ever.
So what's your time frame?
1 hour, 1 day, and 1 week. And I can do the same damage with a 5-minute.
Oh, totally. Yeah.
So to me, the hour is enough. And
hours a lot. Yeah.
That's, because I also want to have a lot of open positions, right? So I've got like 20 shorts on. I don't want to be looking at a 5-minute chart on all of that. So I can set my my stops based on an hour bar, right?
Mm-hmm.
Not to take out the highs of that bar, for example, and that's comfortable for me.
Gotcha. Okay. So when you mentioned a moment ago, you said like convicted. How does Samantha LaDuc go about becoming convicted on a trade? Like, what is it? Is it just like a pattern that you've seen in your brain? You're like, yeah, this looks good. Or are there something along all time frames that just really, really add up and make a lot of sense?
Yeah, this is tough, because when I am convicted, it means something really bad is going to happen. No, seriously.
Yeah.
Seriously. I don't get excited. I mean, I'm passionate. What you sense right now is we know our business. We love our business. We want to add value to our business. And by the way, I want to be right and make money. There's a lot here that, I get paid on ego, not just, trades. I get paid on ego, not just clients. So it's important that I'm not over trading. It's important that I'm not trading too big a size. It's important that I have a positive sloping, equity curve. Otherwise, I'm not going to be seen as legitimate, right? And credible. And I want nothing more than to be seen as legitimate and credible. So I'm careful.
Mm-hmm. Sure.
But when I'm convicted, you'll know it. So the January 2018 top, we dropped precipitously, only 2 weeks, mind you, but I was so convicted that I went strongly in, and I doubled my account in 2 weeks.
Right.
Now, that doesn't happen very often. Right. And I will also tell you, Jerremy, that even though I doubled it in 2 weeks, I still ended the year only up 60% because I got chopped up to smithereens in between, sure. Right? I gave up a lot. But when I have the conviction, I'm pretty convicted.
So how do you hold through situations like that? Do you just...
Well, I held badly, so that's my point.
So funny.
It's really frustrating because you're like, oh, I saw that, but I didn't see that.
Mm-hmm.
So the rest of the time, it is very much, I make a decision that the market, for example, is in chop zone. We're not in chop zone. We're in Cuisinart zone right now. But there's a point where I have to have longs and shorts. So I go from mostly longs and some shorts, right? That's the hedge to long. And then I go from kind of equal number shorts and longs. You know where I'm going with this.
Yep.
I'm now mostly short with very few longs, and the longs are really not doing awesome.
Yeah. Yeah.
So I feel like I have to have some, just because it would be irresponsible to do nothing but shorts. But I'm talking about that whole basket of time frame, chase, swing, and trend. I will have a smattering, obviously, of positions. And that's what, at the end of the day, the total account value better be up.
Right.
And I post that. So you have to also understand, this is, for me, every trade is real, with real money, and real time, and it goes live. It's not manual, it's automated. And I have a live open P&L, updates every 20 seconds. And I have a live end of day total account value. So there's nowhere I can hide.
Yeah, it's tough. Exactly. It's tough. You having that focus where you're trading and you're looking at it and you have different time frames and you have different just things that are happening as quickly as they are right now, having the ability to end like you did, like you're talking about 2018, what would cause someone to just say, hey, I'm done for the year? Like if you double your account, you're like, okay, I'm done for the year.
Yeah, so that would have been sweet, but here's the other problem, because you and I are in this, right? We
Yeah.
have clients, and
Yeah.
they don't let us go on vacation. And I told this to clients at the beginning of August, okay? I said, if I could go on vacation until the 20th of August, I would, but you guys would fire me. And it is going to be a chop fest. It's just going to be a chop fest. It's going to be absolutely nasty until Jackson Hole, which is the Fed, gathering. And we have some major economic releases that also come out around that time, 22nd through 24th, which are going to scare the market, I believe. And until that, I just don't even want to show up to work.
Mm-hmm.
It's just not worth it to me, because we're just going to get slaughtered. And that's how I feel. But I can't take 3 weeks off, because then, they're going to think they're not getting their money's worth.
Right.
Where in fact, I think I could have saved them a lot of grief.
Right. Right. Yeah. And that's an interesting, very, very interesting standpoint on it, I think. And that's a unique take for sure. And you keep bringing up the Jackson Hole thing. So let's talk just a little bit about that. I mean, what's your vision or thesis on what might likely occur there? I mean, you mentioned that they're going to cut rates again by a half.
Yeah. So they have no recourse, period. I'm firmly convinced he did too little. And I had, telegraphed either way it was going to be a disappointment. They're going to cut, but, it's going to be a disappointment. So that was a 25 basis point cut, and they stopped the balance sheet runoff. Wasn't enough. We have a ginormous structural, debt issue and dollar strength issue, and they are going to try and intervene. There's no question. Plus trade war, plus yuan, all that. Global slowdown, all of that. There is still the best yield differential is right here in the U.S. for rates for, generating some kind of, return on money. But it is not going to be market friendly if Fed in September, which is not until mid-September, if they don't cut. And I think this is going to be telegraphed or signaled earlier, in the same way that we had January 4th, right? Powell came out and said, and if you go back on your chart, look, January 4th, after the December Christmas Eve massacre.
Okay.
He came out. Do you know why we had the huge move higher? Wasn't just Mnuchin calling the banks, right? And we're like, why? Well, because credit stopped for 56 days, 36 or 56 days in that December timeframe, where markets just continued to free fall, a 10% drop. Mnuchin called the banks. We had the Christmas Eve reversal. Powell came out on the 4th and said, guess what? We're not going to cut anymore. Yeah. And markets rallied after that. So then fast forward to June 1st on your chart.
Yep.
And if you recall Easter, you won't recall, but I did a market huddle interview, and I said, we're going to turn now on, it was April 22nd, the Thursday before Easter. We actually ended up dropping April 22nd through June 1st. If you go back on your highlight. Then June 1st, Powell came out, go right to June 1st. He gave a meeting, or is that first? What day is?
Well, first was a Sunday, I believe.
Okay, so it was the next day. It was a Monday. It was after he gave a speech and basically said, yeah, we're going to have to cut. And the market said, yippee. And then they rallied some more. And then FOMC happened. They didn't cut enough. They only cut 25 basis points. And then Trump, as a way to bully them, which was my whole thesis, Fed is not, it's just going to disappoint, because anything that they do, Trump's going to use as his tariff turf war. And sure enough, the very next day after FOMC, Trump came out and said, yeah, we're going to levy those tariffs September 1st. And the market, 4 days and 6.5%.
Yeah.
So macro matters. It really, really, really matters. Even at a high level, if that's all you do is watch the headline risk from Trump, which algos love. Watch the headline risk from the Fed. And not all the Fed heads. They're really noisy. It's got to be Powell. But nonetheless, they can come out and they can create this, they're all singing the same song kind of thing, which is exactly what they did before the Fed came out and cut. They all came out and said, yeah, we can see a basis for it. So they got the market ready for it, and the market was really excited about it. But they were already buying the rumor, and then they sold the news, especially on the Trump tariff threats. So that's trading, right? You can't always know that from a price bar, but I learned from price bars, and then I extrapolated that out to patterns, your most powerful ones, right? 2-bar reversals and head and shoulders and, ascending, descending triangles and all these things, trend lines and moving averages and all these things, Fibonacci, love, use all of it. But it's really, I think, more useful for what for me to know why something is moving.
Yeah. Which, so the question then, back on the FOMC, if they would have cut rates to 0.75, do you think it would have been the same event? Regardless of how much they cut, we sort of had a little bit of a drop.
Well, I think that the fact that they kind of double cut. They cut 25%, 25 basis points, and they stopped the balance sheet runoff for the 1st of August. But it was then used against them, obviously. Trump didn't get what he wanted and, ratcheted up the trade wars. If they had done too much, it would have sent a different kind of fear. So it's a balancing act. 50 basis points was what was needed but it wouldn't have stopped Trump. He might have waited the weekend. But my whole thesis has been, no, this is what he's using to get leverage over China. So, this is not a game. This brinkmanship is not a very safe game. Political, what do you call it? Bias aside, it is very clear we need the expansionary effects of trade, and we don't have it.
Yeah.
Period. We need the expansionary effects of trade, and we don't have it. So that is, until we get a trade deal, snowball's chance, in my opinion, until Powell, quickly signals, yeah, we're gonna cut, which is also a tough sell because he's loath to cut. He came in with a directive of, tightening, and now the market's saying you went way overboard, while the rest of the planet is lowering their rates, and he's still not really on board with it, but the market's going to make them. So I would be very surprised if they don't come in for Jackson Hole and intonate that this is what signal that this is what they're going to do for the February meeting. Otherwise, the market's just going to continue to bleed down. Yeah, 2,800 is easy. We'll have that by tomorrow. But I mean more than that, right? 2,700.
Yeah. Which I can't let you get away without giving me some projections then, because I got.
What are yours?
So here's my thoughts. I do agree with you. I think that especially with all of this happening at new all-time highs, because a lot of people think they're saying, oh, the market's bearish. I'm like, well, I don't disagree that we can't have a lower move, but we did literally make new all-time highs 3 weeks ago. Yeah. So we're still making higher highs and higher lows. It seems to me, can you still see my chart?
Oh yeah.
So we have the S&P. I think most realistic, very, very viable spot right above 2,700 is where we most likely will get to, something like this in September. Just make a nice new low, because that's where everyone's stops are. Yep. Big picture, long areas, people are just they don't want it to drop. Again, we just had new all-time highs, so they're going to be cautious. And then I personally think the market drops down into these areas, stops everyone out, 2,700-ish in some change. And then we have another Santa rally, as wild as that sounds. I don't know if it'll happen in November or December or January, but I do personally believe that we'll make new all-time highs again, just once everyone gets stopped out. Because the tariff thing, regardless if it happens or not, the markets, as much as they hate them, we have recovered from each tariff discussion in the past, and I would assume it's going to happen again.
Yeah, the tariffs, when you're talking about tariffs, our tariffs, or you mean historically with tariffs?
Historically.
Okay. Yeah, tariffs for me are not the
you don't think they're going to be the main catalyst?
I don't think that's the main catalyst. Nope. I think tariffs in their own little world would, definitely shave a few small points off of GDP. They would definitely hurt some industries more than others. I mean, you can already see what's happened to retail just on the threat of, consumers not buying apparel because of tariffs. I mean, oh my God, it's much bigger than just the tariffs and the debt and this negative interest rate phenomenon, which is, by the way, really
wild.
It's wild, and it's not supposed to be this way. It's not. In my opinion, they're trying to sell this new normal. No, it's just abnormal. It's not natural. It's not a good thing.
Under no circumstances can it be a good thing. Under no, I'm not even the negative interest rate thing truly blows my mind.
It does. And unfortunately, so do the deficits that have to continue to be funded or we default. And by the way, default isn't an option. So that's why we have bipartisan support on this. And these are all concepts that really aren't really, day-to-day trading on. And yet, if you have a bullish thesis and then all of a sudden the floor gives way, it's very, very, dangerous. So for this all to culminate this particular fall, meaning, I would normally give your argument of, technical head and shoulders that basically is a continuation pattern, right? Yeah. Kind of, sort of. Yep. And that's a great pattern. If we didn't have the, the trade war, the global slowdown, the China retaliation, the currency wars, the strength in the dollar, the talk of dollar intervention at the White House, if we didn't have the twin deficits and, more importantly, how to finance that with debt ceilings constantly going up and no way to pay for them, there's this inherent kind of, let's say, weakness, right? And I think the weakness isn't the problem because it's been there for a long time, and I don't trade based on, fear. I don't panic until I have a reason to. And like I said, I, went from mostly bullish, a little bit of shorts to equa. Now I'm mostly shorts and very few bullish positions. So I'm pacing myself because unless this is 2008, and by the way, it may be, I don't have confirmation of that, and I won't until September. That's another thing. Unless this is 2008, your scenario is much more likely. However, there are signs that this is like 2008. And the signs are very clear in that we have no stable rate curve, yield curve at all. That is foretelling doom. And honestly, our bond market is bigger than equities. And
absolutely, yeah. Okay,
so when you have that, then you have gold miners, all of that, freaking out. That's also 2008-ish. Now, what would reverse that, of course, is a higher dollar, but only temporarily. Because then the dollar hits a particular resistance level and then it crashes unceremoniously, and then gold takes off like a you-know-what. So right now, the fact that we had Bitcoin, bonds, gold, and dollar, and what am I missing? What else? Risk off. Gold, miners, bonds, Bitcoin, everything risk, yen. So the fact that we have this safety move, okay, into these asset classes that are absolutely risk off. We have money that has left the building, the money that is migrated into money markets is impressive. The money that has moved into bonds is impressive. So what we do have, of course, buybacks, right? And we got some solid tech companies. China hasn't hurt them so much, but if we have this risk off trade and this money that's left the building, until we have a reason to really come in, and in other words, I don't think price discovery is real in our S&P. Until we have this wall of money come back in and support higher, I think we go lower first. And that is right now probably 70-30. In other words, I give it 70% chance that we're actually going lower. And I don't mean a knee-jerk reaction after, FOMC. But I mean this sideways. We have these big chops, right? Big up, big down. But basically, we've been sideways for a year and a half.
Right.
So that's what I mean by, if we're going to take out the highs, we actually need a bullish argument for it. Trade war over. What are the chances of that? Rates stabilize. What are the chances of that? Those are the two big reasons that would give me a much higher conviction, much higher conviction than buybacks will save us.
I love it. That's very interesting discussion. And I'm 100% confident, Samantha, I could talk to you for like 7 hours.
Okay, but you got to go back to trading.
Well, we do, but I do want to show people that
That's a god-ugly picture of me. I'm putting my hand over the screen so I don't have to look at you. Look very handsome, Jeremy, but get that
You look beautiful as well.
Get that off my screen. Oh,
I'll get off the screen. You look gorgeous. You look gorgeous. It was amazing to meet you in New York City. And I just want to say thank you for, all that you've done for the community and the trading world.
Oh, that's a sweet thing to say.
Yeah, you've done a lot. You've really helped a lot of people. And
I think the same of you, because you are a true educator and cheerleader. Like, I am basically having these thoughts and I happen to share them. And if somebody agrees, great. And if they don't, oh well. But it's my thing that I do in a vacuum. You actually put yourself out there to help others, and your patience, your teaching mantra is, like, seriously, when people say, how do I learn, trading and options? I'm like, go see Jeremy. I'm sorry. I'm so low touch. It's ridiculous.
That's funny. I love it. Well, thank you, Samantha. And again, I'll send you a copy of this recording, but it's I truly appreciate your insight and your wisdom and your years of experience in doing this. It means a lot.
Aw, thank you very much. And continued success to you and all of your students.
Absolutely. You got it. Take care, Samantha.
Take care. Bye-bye.
All right, bye. Ladies and gentlemen, a legend in the industry. This is her on LinkedIn, but she said she normally uses more of her Twitter. So make sure to follow her on Twitter. I just followed this particular Twitter handle. I haven't followed it yet, but again, I always love assimilating and getting information from people. This is her website, LaDuc Trading, if you ever want to check that out. And we did get a small little cute bounce out there that we were talking about right before we brought Samantha on for the discussion. Just again, on a day trading level, like cash generating, scalpy scalp type of approach. You did get a nice little double bottom here on PayPal with this Morningstar reversal. Beautiful bullish candle. PayPal, one of the stronger companies out there today, didn't sell off as hard as a few things did. So this is the daily support on PayPal. We just kind of came into the exact same levels that we've bounced at before on the daily chart. And with SPY, we will just kind of have to see what progresses and what transpires on the SPY and, figure out if we actually bounce or roll over. I did get trailed out of Netflix. If I set my stop too low, that's perfectly fine. I'm not going to be upset with that at all. Again, was able to just pull out about 3.3 Rs from the markets on day trading today, which was a great day for trading, and some beautiful, beautiful moves out there that occurred. Netflix being one of the primary setups, and just, good move. Interesting to see what happens out there. Really, really pumped that Netflix is going to pull back some more to lower levels so that we could look to potentially buy some longer-term location levels on Netflix. Samantha was talking about Bitcoin as well. We looked at Bitcoin today a few different times, but pulling it up just to have it on the screen. Going to be interesting to see how we interact with the 100 simple moving average at 9,600. We haven't hit that in months, and it'll be interesting to see potential investors seeing this one as a safe haven for some longer term moves. Obviously, incredibly, incredibly volatile, but we'll find out how it transpires and what we do. Folks, today's been an absolute great day, and I could probably just sit here and talk to each and every one of you for another 4 or 5 hours, but I do have an appointment. I need to go and meet with 2 of my mentors this afternoon to discuss what we're going to do in the future for some businesses. Jason says that lady is freaking awesome. She is, man. Love her energy. Always have. It was just an incredible to meet her in person and just being able to trade with her and share market wisdom and ideas. Passion can get you a long way in your lives, ladies and gentlemen. So I'm going to dip out. If you guys need anything, hit me up on Slack. I'll be back at 5 Eastern for Energy Wednesday. And until then, love life, and trade it. Bye.